All right, welcome back. We're back at it, trying to get back on schedule. Give you a little update on the portfolio and some positioning, kind of added some positions, took some adjustments to some main positions here. So I just want to kind of dive in and try and make it quicker than usual. And I usually say that, but we will see. If you don't know who I am, Ben Collins, CFA Charter Holder, Chief Investment Officer at Options Autopilot, which is an automated options trading platform. If you want to try that out or check out some more info on that, the links are going to be in the description. But I wanted to just kind of start off and do a little update and talk about, obviously, Intel's been in the news. I kind of wanted to go over some valuation thoughts, some technical thoughts, where do I think it could go, and kind of how I'm positioning it into earnings, and just in the near term. So definitely subscribe and follow along, and like if you appreciate the transparency here. So I'm just going to kind of, I've been going along, I've been following along, kind of showing how I'm adjusting, how I take risk, and how I adjust positions. Obviously, this is for informational purposes only. This is my, my own capital, a little bit of my capital. So don't do what I'm doing. This might not be right for you, but just want to kind of give my thoughts as an example on how I approach, the markets and just risk taking in general, usually with options. So in general, if we start off with the broader market, I'm actually going to bring up S&P. Let's do SPY stock. So I want to look at the year-to-date numbers. So now if we look year-to-date, it's pretty much recovered from the sell-off, but we are only up about 43 basis points year-to-date. So obviously good to be positive, but mostly flat. If we look at my account, again, the MES, remember MES is just the automation from Options Autopilot. So anything you see here from a year-to-date standpoint will be automations related. So if we go to all these MES positions, let's see if we can just go like this. We can see year-to-date gain 3,473, whatever, jumping around so far year-to-date. And again, on this account that I'm using for automation, it varies. So I move money in and out of here, but it's probably average if I'm conservative, 30,000. So this would actually be, above 10%, approximately 12% return in general. So 12% year-to-date from purely hands-off automation. I will take that when the market is flat. And we are actually up, and pretty much, all the users that I saw were up year-to-date when the market was down. So a lot of people have similar results. And again, this is mostly just running the 1-1-1 strategy automated. Some of these others are test kind of strategies that we're doing for, zero DTE or shorter term for funds and other advisors, just to kind of show them the concept. But, coincidentally, we had a lot of noise the other week, and then the market rallied. And that was a time where a lot of stuff came off automatically. So I kind of got de-risked after the recent rally, I guess. You can see that I only really have one position here, one position. That's the technically a strangle iron condor that we're testing. We got only two positions open on the 120-day and 90-day to expiration strategies. 75 only has one, and then the 100-day has zero at the moment. I believe this will run tomorrow. And you can see this has obviously been kind of lucky. Obviously, 100% win rate isn't going to be the case. I started the 100 DTE earlier this year, right at the end of last year. So even with all the volatility and all this that's been happening with the war and everything, it still has managed to be 100% profitable. Again, in general, that's not going to be the case. I would say on average, we've seen about a 85-ish to 90% win rate. And again, that's going back, and I use my fiance's account as an example because she basically had it going since, I'd say right before the Liberation Day last year. Then she's up it's a 90% win rate. And so that's just been totally hands off. She still has never traded an option in her life, and she has a 90% win rate. So that just kind of goes to show the power of just consistency and using automation as a benefit and tool. But we can see outside of that, I did make money on this hedge from ES, but now you can see I've given some of that back. So overall, it's been positive, but even if I remove that and had not done it at all, you can see that these are still positive year to date pretty significantly on a percentage basis. So that's been helpful. I've mostly just isolated that. I started to do directional positions. Intel is one of them. We'll get into that. That's been a big winner. RIVN and SOFI, if you follow along, I've had them on and off in my portfolio at various times, but the net negative is from those positions. So obviously not all winners, right? So if someone kind of says they can totally call the market, I would call BS on that. This is just, again, from risk management, and I am adding back into these positions, and I'll go over why and what I'm planning to do. VIX has just been kind of, again, sometimes a hedge, and we've also been running a 0 DTE kind of testing on VIX. So that's also, this is a little skewed because it's like we're doing it just regardless, and I'm buying the strangle instead of selling it. Typically, I would probably sell it because that's probably going to make money most times. So this is obviously going to almost for sure lose money just the way that we're approaching it, but I'm fine with the smaller, loss just for testing purposes. It doesn't really matter to me. So that kind of the general overview. I mean, in terms of the actual market, it's kind of acting pretty resilient at the moment. So before we get into actual Intel, which we will here in a second, if my computer will think properly, then I can actually show you. I don't know why this is lagging so much. Okay, so obviously it's been a pretty big rip back, gap higher, and until we get above the previous highs, I still think, I don't want to use the term like the bears are in control because I don't necessarily think that they are. I think that the market is digesting a lot of potential scenarios, and whatever the taco trade is, people are calling it that now, which I didn't necessarily know what that was until recently. But again, in general, I think we could continue to go higher. A lot of people have referenced, earnings are actually doing better, and I think valuations have come in more recently after these, drawdowns, and there's been a little bit of differentiation here. So, a lot of the Mag 7 has pulled back. So from a valuation standpoint, they're not as rich. So it's possible. I mean, look at Microsoft. It's kind of been hit decently hard. I might look to do something with Microsoft, but we'll see. I mean, it's pulled back pretty significantly. This kind of goes back to what I was talking about with all these claims of, needing all this compute power and OpenAI making all these deals, which again, coincidentally is in the news. And a lot of people are saying, data centers are getting canceled in terms of the build out. And I don't know if that's because people are protesting, wanting data centers in their area and like driving up energy prices, or it's because there really isn't that much demand as much as they thought. Could be a combination of both of those things, but you just got to be kind of aware of those things. But Microsoft has a pretty big, I guess, global reach and like kind of installed user base, and I think they could monetize pretty quickly. And there's been a lot of things that even my fiance was talking about that she can do with Copilot that maybe some people aren't even aware of at this point that could replace a lot of things. So I don't know, positive for Microsoft, maybe negative for people's jobs in general, but that's a whole nother story. We won't get into that. So I will touch on Intel, RIVN and SOFI here. Intel, you can see, is the big winner year to date, up $9,122 overall in this account, up $11,919. So pretty good very good from a percentage standpoint, obviously just on this account. So that is very positive. I wouldn't necessarily expect that all the time, although last year did have a very good percentage return on that smaller account as well. So just as an example in terms of risk management and progressive kind of not betting but position management is what's possible. And this same thing happened, except last year we had Intel, but we also had SOFI was a pretty big winner last year. And again, approach it the same way, because I don't necessarily know when the market's going to go. I can obviously try and have my own fundamental and technical opinions, just like anyone can. But it does come down to risk management, right? So when I'm, risking money and I'm cutting my loss when it's, taking a smaller loss, and then obviously when I'm gaining, I'm adding to those positions. So basically, Intel, I have shifted from I was fully long calls, and then I rolled them up. Let's look at the activity just because, again, transparency purposes. I always think it's helpful to see people who are actually risking money in the market. What do they do? Not everything is, this is an example where this is working. But in general, it doesn't always work. So it's good to see when things don't work. Let's see here. Year to date, I guess. Yeah, so I've been decently active. And most of the time it's just been kind of legging in and out and stair-stepping my profits and like rolling up. My general approach is typically, start smaller. If I get up a certain amount, I will add. If I get up more, I'll add more. And then at a certain point, if it kind of hits a profit target or sort of a technical level, I will likely roll that up and out. So as an example, and again, we're working on automating these parameters on options autopilot, so stay tuned. That'll be huge because I do think that this will work on technically any stock. You just got to be cognizant of how you're approaching it and what levels you're using. But if I could just basically kind of set what levels to do this at and it would just run, then it could. So obviously it's been on a tear. I originally kind of talked about if it got back over 50, I would add to my position. This did happen. I think I added to my position. And then let's go back and look at the activity, because I've been pretty active more recently, right? So I'm trying to think of where I started. So I think yeah. Either way, I obviously got back in kind of April and early April, so just a little bit ago. Yeah, and then I kind of added, and then I basically sold those positions because you can see I basically bought $8.20, bought 5 contracts. Then I bought an additional one because I had gotten up, obviously, a little $2 per contract. And then obviously you saw a day later it went to 14.30. So I then sold that and then kind of moved up, right? Because I think it was close to getting at the money. And usually I'll roll back out of the money or do a typical specific delta. So that's why I kind of rolled it up and kind of both reduced my delta exposure, but then had the similar amount of contracts on. So then I bought 6 back at 70 strike, and then I added. And now recently I then legged in because I like this is getting to be a pretty extreme move. And again, this is where it's a little bit discretionary. This is harder to automate, but because earnings are coming up and it has had such a huge move, doesn't mean it can't continue. I actually think it might. I kind of wanted to hedge it a little bit because like I did before, I kind of took my profit at a certain time of the year and then I turned it into a call spread. And that call spread can get me another like 5x, right? So for example, I'm up $9,000. If I basically, let's make it easy and I made the position 10,000, so I'm almost risking almost pure profit. And I now could buy let's see if I was going to do Obviously prices have gotten even, not worse, but like more skewed, right? But let's just take this as an example. Let's say the market's closed, but if I did an 85.95 call spread now with my profits, so that's $2.30. Technically, you can expand to $10. So that is, 4x the value or the profit potential you can see here. My max profit $770, max loss $230, right? So I can basically triple my money. So any capital I could risk, I could basically triple. Again, it has to move quite a bit for this, but just as an example, this is where you can kind of compound your returns very significantly, and all I'm doing is risking my profit that I already made. Obviously, it would suck to give all that up, so you have to be kind of careful, but the example is basically the same. So I basically legged into selling these, so it's kind of hedged. I've almost basically removed all of my risk from my original position. So now this could technically go from 70 to 80, and again, this could become $10. Right now it's roughly $3 and some cents, but I've removed all my risk out of it. So anyways, that's just the way I'm trying to compound things. And my original play was if it was going to get up to 70, I would do that, but it's just been moving, and you can see that earnings are coming up on April 23rd. So it is the 13th, so in 10 days, they're going to have earnings. I think they could be positive. You just never know if it's going to be sell the news. Plus, you'll get a lot of volatility collapsing. So you can see this IV rank, 96%. So super high. So no matter what the direction is, the volatility is going to come out of those positions. So when that happens, me having sold those calls against my long calls will help counter that volatility collapse, and that will be more of just a directional exposure of what the underlying stock is doing. So that's why I did that. Again, more recently, I got back into RIVN, again, smaller positions to start. Obviously, I'm using my discretion on getting back in because I already took my losses earlier. But I think that some of the concern, a lot of the selling has already occurred. So again, I still like SOFI, but I went really long dated on both RIVN and SOFI, and farther out, right? 20 strike on RIVN is pretty high up there, and 20 strike on SOFI was farther out, but now it's kind of rallied. So if we look at SOFI, I just think they have a lot of ways to win. They just seem to be disliked by the market, which I'm sure that they're much smarter. So they have their reasons. But this kind of looks more like a bottoming pattern, in my opinion. And I think that if we could recapture this 24 level, again, this used to be a previous all-time high until this broke out. I did think it was really going to rip farther. And then it ended up kind of coming down and collapsing, right? So I think it's kind of forming a bottom, and that's why I'm starting out small. I feel like this is a positive kind of signal where it broke up here. And then I think it will kind of continue to march higher is my hope. And as that happens, I will be adding to my position as I get up profit. And then the same thing is the case on RIVN. So look at RIVN. Again, I think I've talked about news flow being kind of important, right? I think that there could be still think there could be positive headlines for Intel. I think we're getting towards the end of that positive news cycle for Intel for now. But I do think there could be more positive surprises for RIVN. Again, it had ripped up here. It has now sold off. It's still holding this kind of uptrend pattern. These lines got messed up, but like it's kind of this wedge pattern. So my hope was when it kind of popped here, it could then recapture this level. And I would think that would be pointing to a resumption of the upward move. And again, I'm just risking a little bit now, and then I'm not adding unless I'm up profit. So that's how you can kind of, again, compound returns when it's going in your favor. And then what I was going to talk about is, Intel, I think it's Northland Securities, has basically put a price target of, Northland, price target of 92 on Intel. So is that possible? I think it is. I don't know exactly when that's going to happen. The previous all-time high, which was back in like 2000, right? So the dot-com era for Intel was 74.88, I believe. So this is not fundamentals or any way you can quantify, but I'm just imagining a scenario because obviously the US government and Trump are invested in this and obviously kind of backing Intel, is he's going to be able to announce that Intel is at an all-time high. And I can just imagine that being such a huge motivation. And this is not necessarily a good reason to invest in a company. I think that it will be backed by some of the fundamentals, but it's just one of those things where it's maybe an added benefit to having a position here. So if it breaks above 75, that will be a new all-time high. I'm sure Trump will come out and say something about it. And again, I think that that's maybe a tailwind to the stock. Depending on how things go, I mean, I think there's a lot of, again, there's probably a decent amount of ways that they can win as long as they can continue, or I guess Lip Bhutan can execute these things. And he seems to have made some good progress recently. So when it was kind of way cheaper, some other analysts had been talking about how, the core business itself was probably worth $60 a share if there wasn't the drag from the foundry business. So if we take that as truth, I don't know. I didn't necessarily look at it or do any kind of modeling there, but let's assume they were correct in their model. Then any kind of foundry benefit or other revenue or income generation is a bonus. So we could say we're now slightly above fair value for the core business, and maybe there's optionality for upside. And the way that happens, markets overshoot both ways. So things could definitely sell back off. I think that long term the trend is higher for Intel, but there could be some pullbacks along the way. And if there is pullback in Intel, kind of depending on how much it is moving into earnings, I might lighten up again my short calls, because it's kind of, I'm trying to take a stair-step process before I really go in, because taking directional positions over earnings is way more like gambling, and you don't have volatility in your favor, right? It's better to sell options over earnings because of the volatility crush, and it's probably better to be very much less directional on the actual stock price. Probably better to be short volatility compared to going into earnings. And obviously this being, IBIT rank of 96, even better reason to potentially sell options. I don't know what's wrong with TastyTrade, or maybe it's my computer, but very annoying. It doesn't really matter. We don't need to see the chart, but in general, the other thing I was going to say is, if this will even work anymore, I might end up going, going to like a risk reversal. So selling puts, buying call spread. That could be a way to either leg into a position or get the actual stock assigned at a lower price if you wanted to hold the actual stock, or if you wanted to kind of express a bullish position here, you could do that. Because you could see, I mean, even if you wanted to make a bet in a year that the stock was not below $50, you could be selling 10 contracts, pull in almost $7,000, and then turn around and take $7,000 by a call spread, right? Obviously, you have double directional position. It's almost like just replicating long stock, but you're doing it in a way where you're getting some leverage and some convexity to your position. And I think that's what it's about long-term, convexity and then just risk management. So those are my thoughts there. Hopefully it was a little bit shorter than normal. Always stay risk manage out there, and we'll see what happens. Definitely subscribe, like if you like the video. Appreciate this honesty, and you want to follow along with how I'm updating and managing and kind of adding. I'm looking at some other positions to add, and I will obviously update the channel when I do that. So appreciate everyone, and definitely manage your risk, and just stay vigilant out there.